This is your host, Stephen Sargeant. We have a fun episode of Around the Coin podcast. We're talking real world asset tokenization, everything from real estate, debt, stocks, issued bonds, everything you can think of coming on chain. We went from security token offerings to real world assets. And we're talking about this with the one and only Edwin Mata from Brickken. He's a co founder and CEO. And he talks about the passion and the fun you have to have in building a business like that. But we also talk about the regulatory concerns, the issues, and the amazing platform they have that make private investors out of all of us. This is a fun episode, especially if you're both in Web2, TradFi, and in crypto and Web3. This covers all the elements and how to get into this world. I love this episode. You'll like it too. Let me know if you really like it though. Reach out to me at the end of the podcast, and I'll give you some insights on how to reach out to Edwin. This is your host, Stephen Sargeant, the Around the Coin podcast. We have Edwin Mata here to talk about Brickken. He's a CEO and co-founder. We're going to get a lot into FinTech, digital asset tokenization, decentralization. We're going to talk about everything on this podcast. Edwin, thank you so much for joining us today.
Oh, on the contrary, thank you very much for having me. It's a pleasure to be on your show.
Awesome. Most of I was looking at your pretty much your resume and profile on LinkedIn. Most of your early jobs have been legal jobs, and it's funny because usually lawyers are very logical, practical, and crypto seems like the last area to explore. How did you even get into crypto to begin with?
Yeah, no, I mean, usually I'm an M&A lawyer by default. Then I entered into tech, and that's where like my mind changed completely. Because I was in a startup, and it was more like you say unconventional the approach, what they were doing. And in 2018, they landed a grant for blockchain involvement, so they wanted to test how it was working. And they put me on top of that as a project manager because they wanted to see if agreements could be executed in the blockchain. That was the whole grant. And I had to start reading about blockchain because I knew about Bitcoin, but I didn't. I was not there, right? And I started reading, and I was like, "Oh wow, I like it. It kind of makes sense how it was, how like the whole traceability, mutability." Because I'm a lawyer, I don't like things to change. You sign and it executes. That's it. So I'm now having a lot of fun. I took the right decision to enter the chaos and the wild west, but in reality, like the foundations is very solid. It's actually super logical what we're doing.
I love it. I thought, back in the day when I first started around 2017, people said, smart contracts are going to eliminate lawyers. We don't need, legal agreements. Everything's going to be on chain. I don't feel like we've gotten any closer to that. What are your
No.
thoughts when it comes to, agreements and smart contracts? Because smart contracts are fairly dumb. There's not that leniency that you kind of need in everyday agreements, like a landlord or tenant agreement. You don't want it to be if you didn't pay the rent by 11:59 on that day, that you're automatically locked out the door. There's
Yeah,
that
the
flexibility aspect. What are your thoughts? Are we close to smart contracts replacing agreements, or are we not close at all?
yeah. So in contracts, for example, there you will never be able to quote any subjective. So with the landlord, like, yeah, the door don't work. There's no smart contract that say like, oh yeah, actually the door don't work. You have to repay or you have to go fix it. Kind of like subjectiveness will never be coded, but objectiveness to a certain degree. But I do sense that financial instruments, which is still contracts, that is perfection on the blockchain. But the relationship between private parties will not be embedded on code. So that was a misconception back in the day. But the more you get into how financial like liquidations or equity or debt or kind of like the financial instruments, which is very logical, A to B, B to A, those can be perfected on chain because it's very fast and then you can prove where the funds are, who the parties are. There's a lot of things that make it very lean. And that's why I was going here. That's why it makes sense to me.
I love it. You also teach, students about blockchain and legal tech. What are some of the concepts that you believe like students struggle with? Is there like one point? Like I'm sure when you first saw Bitcoin, you're like, there's no way regulators are going to allow us to have digital synonymous cross-border payments without them getting their cut, right? Like, what is a concept that you think your students still struggle with today?
The basics, like what is blockchain? Like that's a they don't understand that it's just a new technology. Like it's not a wire change. It doesn't mutate what you're trying to do. Just because you put something on chain, it doesn't create a new thing. Kind of like it's just an embedded technology where things run on top, right? So when I have to explain even the minimum concept of what is blockchain, they're like, oh, so that means, like you said, like, oh, contracts are being on chain. No, not everything has to be on chain. It's just part of the process of you using a new technology out there because it has some sweet spots. But does everything have to be on chain? No. And I think that was a great conception on 2018. Like everybody was putting everything on chain just for the sake of it. And it's like, no, it's just a new technology. Like you don't, whatever fits you, you have to keep it, but don't overplay the cards that you have. So
And I think we're
the for
back at bringing everything back on chain again with real world app. We went from like everything on chain to maybe not everything to everything back on chain again, guys. That's what we need. You see a lot of students, you're obviously in the industry. Is there any specific characteristics that you see people are a little bit more successful or they, this clicks a lot quicker for them than others? Like, is there a certain characteristic, a way of
yeah,
thinking?
it's funny when you say like we're gonna talk about fintech because fintech for me is the best use case. I mean, right now stables, of course, but payments, remittances, and all of these things that a lot of people are not used to it. Like for example, I'm Mexican. Like I used to live in the States, sending money to Mexico, super expensive. Without like back in the day, just we had like a Monex or MoneyGram. Like they will take like 12% on the remittance. That's crazy. And now you can do it for 1 cent. Like there's a couple of things that it's so efficient what we're doing that payments, liquidations, a lot of debt, like banking instruments where you go to the middleman, they suck your life out of it. You can do it now with a P2P. Like there's a lot of efficiency being built. So for me, fintech on chain, it's the best use case.
And what's the current state of like, what do you believe the current state? Because I feel like there's a lot of iterations. When we say fintech, that's very broad. There's,
Yeah.
banking as a service now that's kind of in the fintech. There's crypto exchanges. There's, your domain where I think you're a lot of your expertise, which is real world asset tokenization. What's the current state we are in right now? And what are some things that, maybe then we can go into Brickken? What is our current state of real world
Yeah.
assets today?
So 5 years ago, what's I only talked to clients to educate them. Really, that's I
Right.
think that's why I became a teacher because I was educating all my clients as to what is tokenization. 5 years ago, like the real world asset was not even a word. They used to call it security token offering, so it was very
Yeah, I remember the
horrible word.
STOs that came
Oh
out right
my
after
god!
ICOs, and people people started getting dinged.
Yeah, that was a horrible program because everything was a security and whatnot. So I think right now there's a lot of specialization in the sense that okay, not everything is that, not everything is that, and I believe that we're in a very mature point. If you from 5 years ago to now, the conversation different, and still we're very far away. Like another 5 years for us to thrive. The thing that is going to enable everything is the adoption of stable coins. So I'm very happy. For example, today there was a news in Spain that they are thinking about opening bank accounts where there's a duality where you can have stables and euro. We already have it in Switzerland, and another countries are already testing like that. When it becomes normal, our whole sector becomes normal because the on ramp and off ramp still the hardest point of pain for newcomers to enter the blockchain technology.
And I think most of us don't care. Like we just want to send the money. We don't care if it's stable coins in the background, if they're doing FX in the background. We just want to be able to press a button that says, "Hey, you can convert the amount I have in my account. Can I send that to somebody without, spending
Absolutely.
$55 on a wire transfer, having to call
Yeah.
the bank because they have, misspelled the name of the, of the destination bank." And like we've all been there trying to send a wire transfer. It's no easier to send to Canada than it is to Mexico, by the way, if you're in the US. A lot of our clients
Absolutely.
have to pay us through wire transfer or, sending it through other rails.
No, absolutely. I mean, in the end, it's we the technology is just a part of the journey, but it's not the end journey. And I think that's the misconception with a lot of blockchain players, where they sell the blockchain product, right? And we're supposed to simplify a process of an already well-established technology. Backing works. We hate it, but it works. At least I can get you the money to you, right? I don't have to walk to send it to you, right? I mean, at least that works. So what we're doing now is optimization, but sometimes we oversell it and say, "Oh, blockchain is innovation." No, the end user, same way they log in, wants to click and send. Like, why are we making everything so complex with different chains, different stables, different wallets? I mean, we're creating a full product that is not necessarily needed. So I think maturity is now because we're working on abstraction and user experience, which should have started from the beginning, not now thinking, "Oh, we made a mistake on the journey. We made everything too complex."
we were too busy disrupting the banks that we needed to get bank accounts from later on. The funniest
Yeah.
thing, it's like you're a teacher, so it's like, hey, we're gonna disrupt Harvard, but by the way, we kind of need your classrooms, we need your campus, we need your books, and we might
Yeah,
need your teachers, but we're gonna disrupt you. It's kind of
exactly.
like that. I always say you don't hear the word disruption too much in anyone's vocabulary anymore. After many of the early disruptors weren't able to get bank accounts to actually build a big
Absolutely.
business. Tell me about Brickken because I watched your demo, extremely impressive, but I also have a
Thank you.
ton of questions. So why don't you give me like if
Absolutely.
nobody understands, no one's ever heard of Brickken, let's say, which many of us already have. Give us the too long and don't read version, TLDR version of Brickken.
Yeah, I mean, so basically, we're a format of capitalization. So capital is very expensive, and you need to have different outputs. Like, where am I going to generate my next potential investment, right? So I'm a company, a real estate, looking for a debt. Like, you can issue it with a bank transfer. It gets complex. So you want to have like different channels. What we want to grill them is, you want bank transfer, we can give it. You want crypto, you can give it. And like, we just digitizing your bond or debt and putting it on chain for you to facilitate the format of capitalization. So I'm reductionist. I'm not your middleman. I'm not your intermediary. You go directly to your investor. You talk to your investor. Less fee. You get more capital. Cross border. So in this sense, what I'm trying to do is just make capital more efficient, but also with less friction to obtain. So you lose less fees, but you also gain more traction. It's easier to onboard your investors. So that's what we're trying to pursue when we say tokenization.
And what's the biggest use case? Can you give example? You gave a few different ones. What's the one that companies are really coming to you for and saying, "Hey, you guys are really great at this. Can we do more of
Yeah,
this?"
debt and bonds. I mean, right now the whole world still runs on debt. Countries owe each other, companies owe to the bank. Like, the whole world is one big mass of debt. So that makes sense to be in a digital format like tokenization. So we do have a lot of different sectors: gold mine, mineral, real estate, IP companies, who they still pursue debt as a format of capitalization. They say like, hey, I got, I don't know, I'm gonna make it a 1 million. Let me get 1 million with tickets of 10,000 or whatever, and I'll give them on top 50% APY or 10% APY. Since it's direct to the issuer and the investor, it is possible to give them higher APY than if you have a middleman, because the middleman will suck part of the earnings. So you give them higher rate, higher APY, and that is why it makes sense for companies to embed their bonds on chain. It's like me to you, Stephen. Send me 15K and I'll give you back 17K. If you send me directly to me to my wallet and there's no middleman, and you just charge like 0.001% on if you do USDC base, that's a frictionless transaction. So it also allows me to give you back more because we
Right.
didn't lose on that transaction.
Because naturally, like if we had to do that right now, if I'm sending you 15,000, there's somebody taking a portion of that transaction fee, and then when you have to send me back the funds, in
Yeah,
full, there's somebody taking and we're talking 3, 5, depending on where you are in the world, 12, 15%, and that kind of
absolutely.
erodes the value that you have in that transaction. It has to make you think twice as to whether you want to do that transaction in the first place. I'm assuming, which
Absolutely.
which doesn't
Le-
allow people to invest in certain areas that they would normally do, because I'm assuming some areas the margins are not that big that they can absorb some of these high transaction fees.
In this example, even though, for example, I'm in Spain, you're in Canada, first world country, the bank of where your bank, to buy the euro to send it to me, will set it at the highest peak because they got euros back. They got their back markets where they buy euros very cheap, and they do a markup. So they will sell you the euro at the high expensive, and then the bank will swallow it through Swift. So that's another transaction fee. And by the time it reaches some banks here, they charge for deposit if it's cross border. So it's kind of like you're losing on the conversion rate, on the Swift, and on deposit. And it's like, if I have to return money and I already lose 7%, I will have to give you a higher APY just to try to reach 15%. So it's all about efficiency.
And that forex is huge, right? Like even like if I'm paying, US clients or receiving US clients, the banks aren't giving me the best rates on both sides of those deals. They,
Yeah,
if
no,
I'm receiving US, they're giving me a low rate on the amount of I receive. And then when I need US to, pay vendors, they're charging me at the highest. So I'm losing so much value just in the exchange rate alone.
Yeah, a lot of people don't figure out that even the bank transfer could not be necessarily the highest lose, is the acquisition of the local currency, because
Right.
that's where the banks make a lot of money. Like the what is it called? I don't remember. The currency markets, only banks play that. You need huge amounts to start buying at cheap value the currency of another. That's why Monex is one of the biggest, because they only play at that level. Like you need like 1 million to play and buy liquidity to do like a liquidity provider of currencies. There's a huge market out there, and people don't understand that market. If a bank comes in to play, you will never play at the same rate that they play. So if they sell you 2, 3% or four on top or whatever, you wouldn't even notice. Like you will be like paying because you didn't even know where to acquire that currency.
Exactly. And because you're going to the same place that can actually facilitate the transaction as well, right? The reason why you're going to the bank isn't because they have the best Forex rates, but that's the place that you have all your money and want to facilitate the transaction. So using a third
Absolutely.
party is going to cost you anyway. And, when we talk about 3%, people might be like, oh, no, that's not that much money. But you have to think on $1 million investment, 3%, I don't like to do public math either, is about $30,000. That's like, probably like potentially some 3 months worth of somebody's salary that's working with you. That's an astronomical amount when you think about the amount of investments or debt you're trying to obtain.
Yeah, absolutely. And I think we make that mistake when we use all of these, let's say, middle authorities, that we say 100 euros, okay, or $100, 3%, okay, I won't buy a coffee tomorrow. We have to talk about percentages. Like 3%
Yep.
is a lot. I mean, make the math. Okay, yeah, it's a coffee, but dude, if under the span and you don't spend 100 euros once, let's say you spend over the your last span 100,000, you just spend 3,000. You just spend a full salary paying somebody to transfer you money just because. I mean, and that's a misconception. We say we talk about numbers when we have to understand the complexity and amount that a percentage entails. Like we lose a lot of money and little ticks here and there. I mean, for example, when you pay to the bank a coffee, right? You got your card machine, and here they say like 1%. Yeah, 1%, 1%, 1%. Like
Right.
the little coffee shop losing 1% to pay with MasterCard is crazy. And then you bring American Express, and they're like, no, I don't want that one. They charge me like 4%. And it's like crazy.
And when you think about like the 3%, to your point, adds up, especially like when inflation's going up by 3 to 4%. Like
That's
the
it. You're
amount of your
done.
dollars losing every year that you don't activate these funds as well. So it's like keeping it and not spending it or not investing is almost just as bad as trying to invest
Yeah.
and losing those transaction fees. Now you're all about putting things on chain. We joked about, we're getting back to the point of putting everything back on chain. What are some financial products, or are there any products where you're like, this doesn't quite make sense to put it on chain? It's just, it doesn't make sense. Is there anything that comes to mind that might be too complex to put on chain or isn't needed to put on chain? Because,
Oh,
in our traditional Web2 world, we're still pretty efficient.
yeah. So I mean, there's building products right now, right? So for example, equity on chain right now, it's a complicated product just because it needs a secondary market where it's tradable and the secondary markets are being traded. Even though it is as complex and we're not built there, it does make sense to put equity on chain because of the transparency, the capitalization, but it's not there at that optimal level. So I will say that even though for me, all financial instruments at some point or later they will be embedded on chain, we have to look at the maturity of the market. So right now, I do believe certain products are not mature enough to be fully on chain, even though the capabilities and characteristics point that some point or another they're more efficient. So that comes to what can be bought on chain, and that's why for me, I mean, debt and money market funds, which are super liquid, kind of like those things that are very liquid by itself or by its nature, belong on chain because the chain is just puts everything on 2x, kind of like super speed, super efficient. And for that, we need financial instruments that by default are heavily liquid.
Right. Now, looking at your website and the way I saw that video, it looked extremely easy to start the tokenization process. Is there any areas where builders on the platform, have trouble setting up their tokenization process, or things that are like, hey, this is very new to me. I don't want to just, press the button go if I'm not 100% sure. Where are the areas where some of your builders are like, hey, I really want to make sure that we're doing this properly?
Yeah, and this is for you and me, maybe a very stupid, naive mistake. But if you go to Binance to buy, let's say USDT, like when you drop down, it pushes you BNB chain, like because by default, like you go to Coinbase, it pushes you to Base. So let's say that the asset owner issues the asset on Polygon. And they say like, okay, we only sell USDT on Polygon. The Web2 investor that already has difficulty gathering the stable coins, go to Binance, buys a USDT on BNB chain, goes to the asset owner, tries to buy, and it says, no, not match. What is that? The guy who has no clue about chains is like, you already made my life difficult understanding USDT, USDC, USD1, USD,
Right.
now I,
Omni-chain, omni
yeah. So those little things matter for the Web
Yeah.
2 because they don't speak the same language of the stable coins, of the chains, of the wallets. So that's for us, it's kind of like it's such a naive thing that we're trying to push a lot of cross-chain interoperability through Chainlink or storing layer zero because our end user, literally, like you said, like we started, we just want click, pay, receive, done. I'm out. That's it. I don't want to figure out where, how, done, who, like why. Just give me the platform that is one click, deposit, receive, and I'm out.
Are there any areas where companies could implement this more? Like, I know you obviously have a lot of use cases. I'm thinking like employee bonuses, even crowdfunding versus
Absolutely.
like traditional VC. Where can companies utilize Brickken more? That maybe not be their like their number one use case, but they're like, hey, now that we're on this platform, we might as well start utilizing some of these other features.
Yeah, I and you brought a very big one. I mean, now the world is remote, right? I mean, little companies, super remote, even big ones. Cross-border payments is a huge pain for an employee, and people don't figure out because corporate lose a lot of money on those transfers, right? So even with the conversion, everything. So paying an employee that is in not in your HQ or not even your continent through stables, like it's so efficient. Like all my employees that we have on remote, they all get paid on the stables, and they're super happy because they're like, okay, wherever I go, I do my conversion, my off ramp. Now it gets cheaper and whatnot. So there's a lot of things that make sense. So we will always go and say like, what is the best use case? Payments. That's it. Whatever payment capital format we can think of, on chain is more efficient versus the legacy. Like legacy works, now let's not say like, oh yeah, now we're improving the world. We're just making something more efficient, and for me, payments will always make more sense.
Especially like when you're paying something like an employee bonus, is like, hey, is it you want to be that to be the cheapest form of getting funds to your
Absolutely.
employees as possible because they're already going to get taxed at a certain rate. The last thing you want to do is add a few more percentages when
Yeah,
you're trying to reward
absolutely.
somebody, right?
Absolutely. I mean, I completely agree with you. You're already paying taxes that you don't want to put a new burden where they lose the next amount because okay, good companies will say like, hey, like I swallow the fee, but maybe others
Right.
will be like, we share the fee because when you do a bank transfer, the bank transfer allows you to share fees or put the fee on the other person. So those options, I mean, depends on the quality of the employer, but that option can really make a difference on the end user, which is your employee.
And obviously my background's like crypto compliance, blockchain investigations. I see that you're doing the know your customer, know your business on both the initiator of the tokenized asset and those that are investing in it, which is, I think that's a huge undertaking. I think that was the problem with ICOs is that, they just used to say no US investment, obviously, because they didn't want to get dinged by the Securities Commission. But like, can you share what are your regulatory requirements, especially from an AML's perspective or a Securities Commission perspective?
Yeah, absolutely. So, I mean, coming from the background of legality, we always thought like whatever we build had to be compliance first because we were hitting at that time the STO market, right? It was somebody that was building, we saw it like in the future, whatnot. So, when we put the KYB as a necessity, we could have done more frictionless and say like, hey, everybody can shoot the STO, kind of like a pop and fun, right? Radically, right? But also we want to build something that is compliant and trustworthy, and trust is something that is the most expensive thing. Like one day they trust you, next day they don't trust you, build that up, horrible experience, right? So from the foundation we say like, KYB bank level. Like I'm not doing or requesting anything else that a bank account, like a bank to open a bank account will request.
Right.
But that deters a lot of bad players because if you don't know what are your bylaws, your proof of domicile, your proof of funds, kind of like some basics that any company who is a real company has at the alarm length, then they wouldn't even know how to shoot a security, right? So KYB on that side, and then for investors, the same, a normal KYC, something that for you to open a Revolut bank account, ID, face recognition, proof of domicile, good to go. And you would not know how many people drop and like even the ID. They're like, oh, but I want to be KYC less. It's like, yeah, but we're dealing with securities and the other person with AML, they're gonna go into a potential default. And it's like, kind of like it's a different product. You wanna go Wild West, go
You
for
want to go
that.
DeFi? You want to go play out there in the DeFi
Yeah.
protocol world and get made up 30% API? Go APY. Go right ahead, right?
Yeah, go get your Luna. Go get your 150% APY, right? It's
Or your
crazy. But
anchor. I'm curious though, how do I make sure now we're talking about digitalizing pretty much digital, these are digital investments, these are digital asset investments. How do I see, like, and we're talking about debt, how do I see as part of an agreement or an investment that now if I'm investing in somebody else's debt, I'm assuming, how do I'm sure that where I rank, right? And traditionally you can see the leans or who's ahead of you when it comes to priority. How do I do that when we're in the digital asset framework?
yeah, I mean, it's since everything like the funny thing about this is that blockchain itself, it's a ledger. Like
Yeah.
the definition of it, it's a ledger. So financial accounts is a major book. It's a I don't know the word in English, but you really can see all the transactions, and that allows you to really have a lot of data as to who you are inside. Like what is your percentage? Like one click, you don't need to go and analyze your Excel. Not gonna say handwritten, but like manually written down or potential errors, and then you have to update like all transactions by itself. Since it's a public ledger, you can capture all the data and start building a lot of analytics. What is the position of that investor from the issuer, but also on you? Because maybe you want to grab like 10% of the debt just because you feel like, or 50% of the company, all of that. So with all of this information that is public, you can really grab it and have on point, real time, 24/7, all information you want. And that's the beauty of it because I don't have to provide it to you. Like I just have to give you the let's say the front that captures all the data versus in other ones like it's super secretive. Like I'm the central authority, it's my information. I don't want to give it to anybody because of law, because I don't care or anything. Kind of like this is the nature of what we're building. It has to be more transparent. And people will say like, but I don't want it to be too transparent. Then C case. Then we have other potential information. But the beauty of this is like you can always know your position, where the money is, how did they off ramp, are they on ramp, are they paying dividends? There's a lot of information that makes transaction more trustworthiness.
So they can
More
see it both
trustworthy.
from like the real world, like, hey, we have an agreement that this company has, like they can see the real world and the digitized, like where they stand, right? You're pulling
Yeah.
both of those sides. And I'm assuming you do that in the KYB process. You're pulling any information about this company, its standing, who's invested in it, the ultimate beneficiary owners, etc. So they now have like almost like a digital dashboard, which is a lot better than like I'm assuming the physical way of doing this or the tangible way of doing this with paperwork.
Yeah, I know, absolutely. I think you nailed it. I mean, we request all of this information to be digitized and we store it in the token. So every token has embedded a link, RPFS of all the links of the company. They have their dashboard or who the company investment and everything. And this is about building trust. So I give you a minimum, right? Like I request the company, the KYB, let's say the minimum. But a company who wants to raise a million, the minimum is not enough. So they could deposit business plans, white paper, prospectus. All of that information is for them to be able to make it to the investor. So who is really trust and wants to build that, they can deploy absolutely all they want to build that trust. I'm not telling them how to raise money. I
Right.
expect them to really comply with, I'm raising 1 million. I'm not just gonna request a button and say deploy 1,000 and I'm good to go. Like it
Right.
depends on the issuer. I'm just a tooling box.
Do you think you have an advantage building Brickken because you come from a legal background where like other companies maybe come from a just solely a technical background? So they always get tied up going back and forth with their own legal departments where like you're building with like legalities in mind. So it allows you maybe to be more streamlined, more quicker in releasing some of your features.
Yeah, obviously I'm biased, but it is a night and day. Like I see other tokenization platforms either worrying about the technology, and this is weird for me to say. Like tokenization, the technology is not the game. It's you're using securities like super heavily regulated. You always had to try securities in the past. Through my M&A already past, I was already dealing with all these asset classes, understanding how it flows. So I already suffered those years, and I'm not an expert in capital markets. So I had to study a lot, but the learning curve was slower, and now I know a lot on capital markets, how it works, IPOs, and everything. So what I'm trying to say here is like this is a very regulated game. And unfortunately, a lot of people think it's a tech game. So we have great maybe business person who say, like, I'm going to enter tokenization. They enter and then like, oh, do I need a license? Okay, I'm going to go to law firm. 100K. Oh, now to do this, do I need to speak with the SEC? Who's the SEC? Wait, the USA SEC? Is there a Italian SEC? Kind of like some native questions that are not there for people already with certain backgrounds.
Right.
A
It's
lot
easier
of
probably to
tourists are
learn the
coming.
tech in this industry than to learn the legalities and the regulatory requirements, I think. Just like
I
as a
gotta say
blockchain
it.
investigator, it's easier to teach somebody how like the technology, crypto, and how it moves on the blockchain versus trying to teach them critical thinking and like to have a compliance mindset. That's really hard to teach, I think, for people.
Yeah,
You have a BKN token. You might call it by a certain name, like a Brickken token, which
yeah,
fuels this platform. Is it solely just to cover, like, explain the tokenomics? Is it just about conducting transactions? Is there other utility where people can
yeah.
send the BKN token versus like USDC and then they can use it for when they're investing in maybe in other entities? How does it work?
Yeah, it's so when we build the tokenomics, we come from Web 2, but we have a token, and we learned the Web 3 mechanics, kind of like the launchpad deal, where you could stake certain begins to access certain options of a certain degree of investment. So we're trying to figure out. Yet we do have the payment transaction fees from the issuer, but now we're onboarding the investor into the ecosystem of that, but without putting friction. So it's an ongoing process as to how we add more utilities because some clients are lean on, yeah, kind of like get the community of holders who can invest here, and then we put a attraction sort of launchpads too. Now we're trying to generate even some other investment opportunity to USDT, USDC because we're learning in the process. So our BKN, I would like to say, it's kind of like the fulfillment of our know-how. Every time we find something radically that we like or we use, we see how we can embed it for the issuer or the investor. Kind of like it's a reward opportunity. Never should be used as a friction point where I can only do so if it's like if you do plus, right? Not
Right.
not not a blocker, but a new door to something that you feel rewarded.
Yeah, why not get BKN token if I can? If I'm doing, if I use the platform a certain way, if I do certain amount of transactions, it's nice to get a little bit something back in return other
There
than
we go.
3% fees for 4x conversion. Talk to me. You guys created a report on, the real world asset tokenization landscape. And you talked about the emergence of debt tokenization. Maybe just give us a high level. I think you've talked about that, but give us a high level of like what has opened up the floodgates in this in this region, especially in Europe.
Yeah, so I mean, it's a new format of capitalization. When we started measuring, they say like real estate is still kind of like the biggest asset class that is being tokenized. Well, I mean, money it is because of stable coins, but then say like, okay, what is then funds? Maybe with securities, but if you look at the mass, it's real estate. But real estate by itself doesn't get tokenized, right? Because the property of the building is not what you tokenize; it's the financial instrument, the underlying financial instrument to that asset class. So by default, real estate promoters were always looking into debt for capitalizing to do or the building or the flip or whatever. So as we see all that study, we can figure out that yes, the first one is stable coins. Money market funds are big by default, but the biggest asset class generating is debt linked to real estate. So we were studying and analyzing all this market. We have to understand that the asset by itself is not the tokenizable, is the underlying asset. And by default, the debt still in Web 2, the biggest asset, the biggest financial instrument being used. So in Web 3, it makes sense. We're not radically changing all financial markets. We're just gathering what is done in the past and then just optimizing with the technology. And that's why I believe debt will still be, and years to come, the biggest asset, the biggest financial instrument embedded on chain.
And how does EU has the markets and crypto assets regulation, the act? It's probably the most comprehensive digital asset act around the world. Some may seem extremely burdensome as well. But how do these regulations impact either your business or the tokenized asset industry as a whole?
Yeah, I mean, this is kind of like it's a cost burden because
Yeah.
you cannot deploy as fast as you would like. It's a know-how also burden because if you don't have it in-house, you need to look it outside. So it's again cost. The good thing, if I may say, that being over-regulated is like if you sell in Europe, you can sell everywhere. Kind of like
Right.
you already went to the highest degree of training that when you go out there, it's like, oh, that's easy. And it happened to us. Like we started moving around a couple of other countries. Just coming from Europe, we were like, this is a relief. And the client will be like, oh, would you know it's something complicated? It's like, let me sit down. Let's have a coffee. Let me tell you what is complicated.
And
Complicated
it's
means Europe.
And
It's
it's funny
horrible.
because those looking at you saying, hey, you got licensed there, it's easier for banking relationships because they're like, hey, you've got the bit license basically of New York. Now we know that you've reached a certain level of regulatory requirements. But more importantly, all your other partners are like, hey, this is the top tier of regulated entity. Let's just deal with them because we don't have to worry if they were able to get that license.
Absolutely. I mean, for us, we grabbed it as a selling point because
Right.
we entered the Spanish sandbox in 2021. So before we deep dive to develop what we did, we sat down with the regulator to explain that we wanted to be a software, not a placement agent, dealing with securities. They were like, I don't like you at all. Like, you're trying to break my system." It's like, okay, I'm happy, but is it legal or not? That's the only thing I want. And they silence that we cannot say if it's legal or not. It's like, okay, thank you very much for saying that it is legal. That's all I wanted
Yeah.
to hear. Then we went in 2024 to the European sandbox and we sat with 27 regulators at different time. I mean, just understanding how they think and why they're so protective also allows us to develop a better product because we started understanding where are the areas, right? And that for us built a lot of know-how. So when we talk to other clients and they say like, okay, why you and not an American company? And I say it's like, come on, see, the SEC, yeah, the SEC is the biggest beast. We know that. But the European regulator, oh, that's a criminal. That's like they don't want business to thrive, so they will push absolutely everything they own on legality to say like we are protecting because we're scared of the innovation.
And a
So
perfect
it's
example of that is Tether in the European market. And even stablecoins in general, they're pretty much making stablecoins just like they might as well just make it a tokenized, digitalized asset at
it's
this stage
horrible,
because it's the stablecoin innovation's pretty much lost in Europe. And I don't know deep
completely.
down, but I'm sure even if you comply, it's like basically you're just giving them a traditional financial product at that stage. You're losing a lot of the innovation. Would you agree with that statement?
Absolutely. There's a funny story here with the stable coins. If you are not a euro-backed stable coin, you can only have volume of 1 million per day.
Yeah.
Like that's it. There's no stable coins in Euro because if you're not Euro back, let's say all of other ones, after all the hurdles of getting regulated, after getting the license, after all of the things, they block you on the volume because they want the Euro back to thrive. And it's like you're thinking so small, like 27 countries, but you guys are very small as a volume of people. Like
Right.
Brazil is already, I think, almost there's more people than in whole Europe. Like, stop thinking like small. Stop protecting the market because you're killing it. So, protectiveness, obviously, that's not innovation. So, with the stable coin market, like people laugh. It's like the other day, I don't know, Circle a couple of months ago say like, oh, we're rich, 50 million market cap, 50 million market cap. Like, dude, have you seen the other stable coins? But Circle is Circle, so they were super happy that they were thriving in Europe. But that 50 million cap that we're celebrating as stable coin in Europe is just laughable.
Yeah, and which is why I'm assuming I don't speak to Tether, but I'm assuming Tether's like we can afford to pull out of this market and just focus on the Latin American market. Like what they're building in El Salvador is huge
Yeah.
because they can actually build there and build out the actual ecosystem versus trying to fit what they have into an existing ecosystem, which is what we're seeing in Europe. You've tokenized, speaking of like millions and trillions, you've tokenized over $250 million worth of assets. It's probably gone up since like even when I researched this in 14 countries, 2 years. Any key learnings from or takeaways from building a big business in this domain?
Yeah, I mean, if I recommend something to future builders, never stop having fun. It took me a long time to remember that because if not, you focus too much on the end goal and forget that the little wins are still huge wins, especially in business. Like one client signed, celebrate that because if you focus on the 100, then you will focus on the 1,000 and everything. So when we started becoming successful, is when the company switched a little bit the mindset instead of we have to be or we have to do or we have to do like we started understanding like as a team, like when you score a goal, everybody cheers. So when we
Right.
score a goal here, let's cheer.
I love that. I thought you were gonna say like if you're building this space, don't build it. I thought that's where you're gonna go. If I had to tell
Run,
anyone anything, it'd be
run.
like go back to law school, go back to teaching. It's easier there. That's hilarious.
That's the
What is
second
the
one.
future of tokenized assets? Like you talked about underlying debt when it comes to real estate. Obviously, the stocks, the bonds, equities is always going to be. ETFs is huge right now. But
Yeah.
where does it lie? Is it things like private credit, liquidity instrument? Like where are we seeing the future of tokenized assets?
Yeah, I mean, if we have a pyramid of adoption, I would like to think like the peak is stablecoins, the easiest one. Then in the second one, we see in like money markets, T bills, right? Some regulated instruments. The third one is the interesting one for me, which is private credit, private markets, and that's where we are building in Brickken, and that's where we see a lot more conversion. And the fourth layer is still kind of like those where it's the asset itself, kind of like the Rolex, the Ferrari. That for me don't make sense, but at some point it might digitize and make fun or make sense for some people. So right now we see a lot of adoption of stable coins. T-bills, a couple of companies did a marvelous job and money market funds. And that is allowing us that people started testing the third layer, which is the thickest and biggest one. Because there's a thing that I'll die by is nobody knows what is the total value of private credits in the world. It's unmeasurable. We don't know. Like we don't know new assets being built and it's debt or new companies being built that have equity. So that's an unmeasurable trillion-dollar market. So that's kind of like the beauty of it. We don't even know what is the true value that it can be embedded on chain.
And to your point about Ferraris, all these influencers are sharing Ferraris anyway, so they might as well have a shared a shared interest or a shared stake in it. I'm curious because private investment is obviously how a lot of organizations and people got rich, especially in the U.S. But there was always restrictions, right? Like the accredited investor, you had
Yeah.
to have certain requirements in order to invest. Do you think this new tokenized asset is going to give more exposure to an everyday investor like myself that might not meet these private investment requirements of having $1 million? But hey, if I put $25,000 in something, I might be able to get to the point where now I'm an accredited investor,
Yeah.
or I might start getting into other investment areas. To your point,
Yeah, I mean that it's. I think it's an ongoing process that they have to understand, not just for the technology's sake, but by itself. Kind of like it's ridiculous that only accredited investors have opportunities of investment because either they have more money or certain knowledge. When right now accessibility is everywhere, right? So United States is one of the perfect case that I never understood the burden to get the accredited investor. They say no, now you can get a test to become accredited, but I still don't live like the retail. Like you're a doctor in medicine, you're well, like you went to Harvard, you still have to take a test to get accredited. He's like, that guy went to Harvard, let him invest. He's like, no, but he's not an accredited investor. He doesn't have the financial knowledge. He's like, are you sure? Maybe he does. Like, give him the option. Like, it's our money. We should be able to lose it or win it. Because it's funny, like they don't let us invest in certain private equity or funds. But when you invest in the bank, you receive all these emails of certain risky products. And it's like, oh, I can invest through the bank, but by my own, I can't. I like, come on, give me release the leash. So I think there's a innovation happening in regulation here in Europe. They reduce the burden on the accredited, and I think it's gonna happen in a lot of countries because it's ridiculous. Like they don't make sense some things, but who knows?
and do you think this will help the industry get away from because they can't invest in a lot of these what we would say less risky investments compared to they're spending all their money on NFTs and meme tokens and investing in speculative assets like that? Will this get this platform allow us to invest in something that's a little bit more
I,
traditional versus like kind of the speculative nature that we have been able to invest in? So where we're seeing a lot of young people lose their money.
I think that is a great question. I had not thought about like that, and I think it makes sense. I mean, if you give them the opportunity to invest in separate out. What is clear now is people will invest in whatever, right? Like
Exactly. Whatever they
literally,
can,
like
right? So if they have access to GameStop, they'll spend all their money on GameStop. And it's like, well, they haven't really
yeah,
thought that through. How do we give them a more variety of investments that they could invest in? Maybe they would spend a little bit more time understanding what their options are versus just investing, as your point, investing in anything that they can invest
yeah.
in.
No, I mean, for that thought, I really like it. I mean, that once you open the tab for certain more regulated that you didn't do, but they are more trustworthy, then people will start understanding that, hey, there's the risk gambling perspective, but there's also the less risky, which I still commit to. But if I'm investing in a meme, by all means, I'll invest somewhere else. Kind of like give me that opportunity. I think I like that thought. I am gonna keep it.
Yeah, don't worry. Your marketing team can pay me later. Open you guys up to a whole other audience. Because I hear, obviously there's influencers and TikTok now, and it's like friends that I've never heard talk about investment are talking about GameStop. It's like, guys, don't just go for whatever's trending. Like, look at the
Yeah,
options that are available. But hey, at least they're now that they're interested. Now that you can bring them in, to your point, and educate them on like, hey, yes, meme tokens, you can go from 0 to 1 million, but you can also lose all your money. Here are some
yeah,
other options where the reward may not be as high, but the risk may not be as high either. But you can do this from the comfort of your computer or your phone, which is, I think, what Brickken provides. That, not a lot of, traditionally you have to go into the bank. And to your point, you have to
absolutely.
get sold on all these other things that you didn't go in there for. Talking to a person that may or may not be able to pass the tests that we're
Yeah,
talking about right now.
yeah,
You were
perfect.
you were
Yeah,
at Paris Blockchain Week, I believe. Like, what's the vibe coming out of Paris Blockchain Week? Was there any key takeaways from the conference?
yeah,
I'm assuming AI was talked about a little bit, but I feel like
absolutely.
the people that jumped on the AI train are they're towing the line now. They want to be able to take advantage if crypto goes up, but they want to say that they're the futurist and they're AI savvy if AI runs away with it.
Yeah, so I went to Paris Blockchain Week like 3 weeks ago, and then I went to Dubai for Token 2049. Different completely crowds. I gotta say that in Paris Blockchain Week there was less retail but more corporate. Also, the market was way worse than it was last week, right?
Yeah.
But I did saw like out of the three editions I've gone to Paris Blockchain Week, the less people but the most quality. So it's a weird thing, kind of like I saw less people this time, but I engaged with more meaningful because there was a lot of asset owners, TradFi banks, which is kind of like who my target persona is for my reason, right? But I was able to engage with such persons. And in Dubai, what can you say about Dubai? Like it's it's Dubai. That's all I gotta say. It was very good because again, I saw a sense of this is my second edition, right? This year, a more mature option to go to. I mean, you can still go full DJing and with chill with the calls and yachts and who knows.
And the shiny
But
dresses.
yeah, of course, at the bling bling, you get all of those people, which is fine. I mean, you want to have fun or whatever, or do your thing, good. But at least this year, definitely there was a lot more option for what we want to do, like the TradFi corporate, which is not necessarily the boring crowd, which we can to be, but the conversation that we want to do is kind of like, okay, we really want to use this for embedding like the whole solid foundation for the next financial capital markets to be embedded. And that's thing I believe that is truly what is going to unlock the trillions of euros coming on chain. It's not your memes, it's
Right.
actually the RWAs.
I'm
And for
curious.
AI, yeah, of course, to
We have
answer
a
your
lot of
question,
build.
AIs, everybody's in AI, everybody is in AI.
Does AI impact the tokenized asset landscape at all? Do you think
No,
where
just
does it have the most impact? Is it decision making? Is it like, hey, now you have all this data about people using your platform? You can come up with trends. You can come up with ideas around like, hey, follow this playbook, or hey, 90% of people that logged on in the last 30 days have invested in this asset class. Is that where AI you think helps you and your platform the most?
yeah, so that's where we actually testing the deployment of some AI structure, and it's in aiding the process of the issuance and understanding how to fulfill certain things. And in the investment side of things, it's something that we really want to pursue, and it has to do with you, like trends. Not not telling you where to invest, but telling you, like, for example, if there's an investment opportunity on solar panels, and you have no clue on solar panels, but it can tell you, kind of like over the last year, there's been an investment and this uptake. Kind of like nobody's going to become a great trader by default. So maybe what we can do is just become a great learner by default. And if someone has all of this macro data, micro data, and it can gauge you on the process, then by all means, listen, are they going to always be profitable? Well, I can tell you that if you're a bad trader and don't read the news, then you're a bad trader by default. Might as well just listen to the
Yeah, exactly. If you're gonna make bad decisions anyway,
AI.
might as well do it with a computer. That might as well do it with a large. At least the collective have made that bad decision, and you won't be the outlier. You successfully raised 2.5 million, I believe, recently. Was that done through the platform or through traditional VC?
Yeah, no, we did this to traditional, and there's a reason for it. I mean, we're still in the growing phase, and we had to say like we were back. But my community knows this. I'm not gonna even do the here's spoiler. Our Series A is definitely gonna be tokenized. Yeah, our business know about this. God, like, it was an onboarding process that we tell them because we build something that we love, and I'm crazy about testing it. It's not that they didn't trusted there, is that we needed that to be back because a lot of people in the space, they're like, who bugs you, kind
Yeah,
of like it's a shit because if my community backs me, I will say like, I got a community. You only have three guys, three VCs who don't even love you. I have
yeah.
a lot, but the world still not ready for that. So we're definitely gonna do it for our Series A because I'm excited to use my platform for my own next race.
I love it. We saw Mesh that's in the kind of like stablecoin infrastructure. Their last raise, I think, was done through their platform. But yeah, it wasn't their first raise. It was definitely down the line. How do you plan to deploy this capital? It's not a ton of money. Like 2.5 million is not a ton. You get, as you said, you could probably spend that on lawyers just trying to set up an EU headquarters. How do you
Yeah.
plan to deploy the capital?
Yeah, so on that sense, luckily we are capital efficient and not in a high consuming country, right? Because if we were in United States, 2.5 is like two Solidity developers. That's it.
Yeah.
Like good luck. So luckily for us, we were able to raise in a country that we pay good salaries, but not compared to other countries, and that gives us a lot of runway. And a lot of people will be true, and it's like I make a lot of profit. We have a lot of clients, and it's weird in Web3 to generate income. And it's like, no, I generate income. And it
Yeah,
was a funny thing. Yeah,
it's
some
weird that
VCs were
you
like,
don't use the entire amount of the capital to run the business, which is a little bit odd. And whether it's
yeah,
traditional tech or Web3 tech, that seems to be the play. Well, we usually lose $1 million a month, so the fact that we raised money is always a good idea.
yeah,
What's on the
exactly.
roadmap for the team in 2025? We got 3 quarters left. What's on the roadmap?
Yeah. So the whole roadmap, we read the vision as to what we wanted to pursue, and it was to end as a full SaaS company. So we really want that monthly recurring web tool. So the whole platform itself has to rebrand into a platform for Web2 companies. So that means abstraction of the wallet, abstraction of the chain, AI, user experience. So the full journey that has to take us this year, and the goal is for a client to go into our website, sign up, pay, tokenize on themselves without us being there. Like that's the objective. Let's see if we can comply.
I love that. I love that. Do you think we could finally bring AI into disclosure? Like disclosures is the hugest thing that you have to deal with. That's like the premise of a lot of the security filings and the commissions and the penalties is all around disclosures, right? That's pretty much
Yeah.
a lot of the regulators' problem with DeFi and with crypto in general is that there are insufficient disclosures. Do you think we could find a fun way? I was talking to Andrew McCormick from eToro, and we were laughing about maybe if we could just send these disclosures to the AI, they could come up with a song or a fun visual to show, like, hey, this is all pretty basic, but these are 3 key areas that you probably should be leaning in a little bit more about, or definitely consult a lawyer about. Because the reality is 99% of people aren't reading the disclosures. So, what's the point of focusing so much on them if people aren't educating themselves on what they're getting anyway?
I think it's a great summarizer with a bunch of bullet points and graphs. Like put a disclosure and give me 2 pager with all the information with the key, and then just tell me where I can read more. I mean, a lot of AI it's about guidance. So a lot of people use it for creativity. It's like, oh, drop me that agreement, but they forget like it's a great reviewer. Like me as a lawyer, like this is gonna should I say this in public? Or people, oh, you don't do your work anymore. Like I use AI a lot. So I receive an agreement that I don't feel comfortable with. The first clause is like, read again. Give me that clause in this thing. Why is it put in there? And I go back to back. It's like having another lawyer next to you. So I mean, with disclosures and everything, or you don't understand some financial because it's I'm a company, and I'll say like my quarterly report. I bombard you with all these terms that you don't know, and just like I'm not gonna sound stupid. I'm not gonna ask them if they're profitable because I don't even know what's EBITDA. Yeah, like just send it to the AI and be like, is this company making money? Yes, no, no.
Yeah.
Okay, perfect. That's it.
Decision tree, not making money. Okay, this puts us in the bucket of 99% of the companies. Why aren't they making money, right? Like, at least get me to the place as to why I know why. But you're right, right? All these decks and presentations, and you're like, hey, like, do I think I can make money despite all these numbers? Is really what it comes down to because the numbers aren't
Absolutely,
helping you in any way.
absolutely. That's it.
Edwin, this has been such a fun conversation. I think
Thank
and
you.
I love that, when I asked you the question about like what you learned, it's like having fun. We've been able to have fun with a very serious and highly regulated industry, but there has to be an aspect of like, hey, what are we doing? If we can get that, if we can send payments, if we can do this in a more efficient way, why aren't we doing it? Especially now, I think money's tight. When money gets tight across the board,
Yeah.
you have to find more creative ways to leverage that or to send that money. So I think people are now looking at your platform like, yeah, I don't need to get creative. I just need to use this platform to put a little bit back in our pocket because we can't just spend, the $1 million that token 2049 to, ride through the venue with the camel with the camel.
Completely, completely. Thank
Anyway,
you very
where's the best
much.
place for people to find you?
Yeah, of course. I mean, go to www.bricken.com where you can find all information on the company. And if you want to learn more about me, I do tweet a lot. So at EDWMATA, that's my Twitter. And hopefully you want to engage more. And if you want to learn more about tokenization, by all means, follow us. We always educate.
I love it. You guys have some great reports. It's been great talking to you, Edwin. Thank you so much for joining the Around the Coin
Thank you very
podcast.
much. It was a lot of fun. Thank you very much. Till next time.